All right, let's begin here. Let's begin. All right, let me just close the door here so that we don't have any external noises. All right. Welcome, guys. Hello, hello. Hey, what's up, do nothing? What's Powell gonna say this time? Lol. Yeah, that's exactly what we're gonna be talking about tonight, guys. So, before we get started, okay, before we really get into the things that I want to talk about tonight, make sure you guys hit that like button down below. I know it's corny that I say it every single time, but hey, it's good to remind everyone to, you know, like the live stream if you guys are enjoying the live stream, right? I mean, most people do like videos on social media, but you know, sometimes they tend to forget during a live stream. So if that is you, make sure you guys smash that like button down below, but only if you guys are enjoying the stream and if you guys are learning something. All right. Okay, so with that being said, I want to go over first of all what should happen tomorrow, okay? Because, well, the markets have priced in that Jerome Powell and the rest of the Federal Reserve have basically not chosen to, or have chosen rather, to keep rates the same. All right, so it's going to be unchanged. There's not going to be any type of changes to the current monetary policy or to the current rate cut plan. All right, and what does that mean for the markets? All right, so now let's get into what that means for the markets first. Well, that just means that Jerome Powell's words will be heavily watched and listened to by the overall markets and every single investor out there, because of the fact that literally 99% is the probability of the Federal Reserve to leave rates unchanged. Okay, there's only 1% probability that they can have either a sudden shift in their policy or that they will cut. But again, tomorrow they're only going to have a 99% probability that they will leave rates unchanged. Okay, so that's gone already, right? That's priced in the market at this point. The only thing that is not priced in will be what Jerome Powell says tomorrow at his news conference at 11:30 p.m. 11:30 a.m. Eastern Standard Time. No, wait a second. No, that's correct. I'm psyching myself out. So it's 11:30 a.m. Pacific Standard Time or 2:30 p.m. Eastern Standard Time. Okay, so you know, with that in mind, I think we need to really focus on what Jerome Powell says. Now, personally, tomorrow, I'm not going to be watching him tomorrow, unfortunately, because I'll be with my family. There's some important matters to go over regarding my own sweet grandmother. So, you know, I will be looking into what he said afterwards, but tomorrow is a very important day, to be hedged. Most importantly, okay, because if you guys are overly short down here or overly long down here, you guys have to hedge on the opposite side as well, okay, in the opposite direction. Why? Because his words will matter and the markets will move in a very large way once he speaks. Now, let's shift towards what will he say. Alright, so this is something that everyone has been pondering now, because of the fact that the markets are already pricing in no rate cuts. Well, first of all, no rate cuts simply mean that, again, Jerome Powell has stated this in January and also in his most recent speech that he made. I don't know what conference it was, but I specifically remember that they're going to stay, their plan right now is to stay patient. They're still looking at things from a month-over-month, week-over-week perspective and time frames when it comes to looking at economic data and reports, but they're also aware of the current economic environment and the overall market environment, as well as, you know, this ongoing costly trade war is continuing. And it seems like there's no going back from it too, as the current administration is fully pushing forward and supporting Trump's tariffs. Right. Then again, we've also come out at this from an objective perspective too, saying that we should be focusing on, you know, growing with our trade partners rather than trying to be, you know, coming back to an archaic mercantilistic type of trade, or even just not even trade, but just focusing on the country itself and not letting anyone else interfere with our economic activity. And again, this is being very, very costly already, as other countries are already starting to form up free trade agreements, and even with China, right? I mean, China has been a huge focus with this current administration, but it seems like other countries are now trying to be cozying up to China, and even Russia now too. So this is really shifting the geopolitical balance of the world right now due to the current costly trade war that is currently going on. So that's something to think about in the next couple of years, especially into the next 2 years, because we also have midterm elections that will affect the overall markets as well too. So this is something that I will be talking about, you know, a lot more down the line, right? We'll touch base back on that once the midterm elections come in, right? But Jerome Powell again and his Federal Reserve members are still being very patient. And the reason being is that, well, first of all, inflation continues to go lower, and overall yields are also going down too. But they should also know that yields are only going down because we're seeing a demand, right? We're seeing a demand in bonds. People are buying into bonds because they're shifting from, you know, risky assets into a safe haven like bonds and other commodities like gold and silver. And I've talked about this multiple times throughout my streams in the past couple of weeks. But again, yields are not going down because of, let's say for example, the current administration's actions. It's going down because there's a huge demand in bond, as people are fearing being long or staying in US risk on assets. Right? And people are pulling their money out, which is not a good sign. And today, I also sent a link in the private CFA Discord community. And please DM me if you guys want to be a part of that community. I'll let you guys know how to be a part of that. And also, please stay tuned into the end of the stream for you know, if you guys are getting access to the overall CFO Stream Watch report as well. Okay, so let me read the actual report here from Bank of America. So based on Bank of America's information and data, there is a record rotation out of US equities and into European equities. And we've been seeing this across multiple different markets, right? We're seeing a lot more people going into the South Korean market, the Japanese market, and the Chinese market. So this is usually the kind of the flow of money whenever people are feeling more optimistic in a different market and more pessimistic about the other market. And in this case, a lot of investors are feeling pessimistic about the current market and economic environment in the US, and they're now flowing their money out, right, from the US market and into the global markets and even into emerging markets as well. So think about, the South African market, right? So this is really interesting to see here, and obviously it's not a good sign for the US economy and the US markets, but we still have to see what the Federal Reserve is looking to do based on this information that we have right now. And I'm sure, Jerome Powell is still staying calm. We've seen him stay calm since, again, they're taking on this current task with patience, as they've said. But at the same time, I do know hopefully, this is my own speculative thinking, but hopefully they are pricing in for future actions from the Federal Reserve of what's currently happening right now, right? Because again, this is a critical and crucial time for the Federal Reserve to step in when they need to. And again, they have told us since last year, they are in a comfortable spot where they can choose to pause or cut rates. But again, we have this kind of a right hook from the new administration of this trade war and tariffs that are wreaking havoc to our supply chains, right? And overall trade partners, our free trade partners, especially the ones up north and south, our biggest trade partners actually. And the Federal Reserve most likely will have to shift or at least alter their current plans or plan of attack for this fiscal year and all the up into 2026. Since again, I've talked about this multiple times in the CFO Swing and Watch report as well, a couple months ago too. That the Federal Reserve has made plans to continue to cut rates all the up into 2026, but that may change, right? That may change, and I don't know. Well, again, this is speculative thinking on my part, but I'm probably thinking that they're not going to hint at a complete shift or an alteration of their current attack plan for rate cuts. But I am expecting Jerome Powell to say something rather, whether it be indirect or directly about this current situation that we are in. And, it's going to be important because the way that Jerome Powell is even speaking, or even his emotions while he's speaking, or even answering questions, especially regarding President Trump, is going to be very, very crucial. And again, in December, if you guys remember, he basically said that he won't bow down to Trump's demands, right? And it seems like Trump, I think back in January, he said he's not going to pressure the Federal Reserve to cut interest rates anymore. I think it was in February. I don't really remember what the actual headline was, but it seems like they're trying to kind of avoid each other, right? Compared to the first time Trump was president, right? Back in like 2018, 2019, when he had his again, same thing, costly trade war, right? And again, if you guys are wondering why I continue to say costly trade war, well, it was, right? This is objective data that I provided in a couple months in the CFO Swing and Watch report a couple months ago. So if you guys want to read that, please let me know by DMing me on Instagram at chartsfocus1. All right. Now, regarding the economic perspective on what the Federal Reserve might say, right? So there's a lot of recessionary fears going on. There's a lot of economic contraction fears going on that can lead into a recession. But remember what happened in 2022, right? And into 2023. A lot of people were frustrated that we had back-to-back negative GDP growth, right? And people weren't really saying that, this was a recession. And a lot of people were blaming the Biden administration for trying to change and shift the definition of an economic recession, or at least a contraction from a textbook definition standpoint. But they've completely disregarded it. They were avoiding the recessionary textbook definition of that term of an economic recession. And people got really frustrated, right? Because it would have made things, quote unquote, easier for the overall markets, right? But again, recessions tend to be kind of panned out throughout the years, right? And when we take a look at the data, that recession fear that we saw back in the early Biden administration was actually starting to flow out from what President Trump had done, right? And so now the current recessionary fears may be a little bit too early, right? And that's my own opinion at that point, but that's what I've seen from objective data. And I'm extrapolating that objective data to my own speculative thinking and saying that maybe this recessionary fear is a bit overblown now, and the markets can actually react a bit positive if Jerome Powell also thinks in that same manner. Does that make sense? Right? So, this sort of uncertainty backdrop from President Trump's actions and the entire administration, like the the Treasury Secretary, right? I think his name's Scott Bennett. He also doesn't think that we're going to be seeing a recession, right? So I'm most likely thinking that he himself does not think that these recessionary fears are real, and it may be overblown. And I might have to agree with him there because, again, it's too early to tell, right? And with Trump's tariffs going on and a trade war going on, we're going to be seeing most of the results from that, 2 to 3 years down the line. And again, I what did I say in the beginning of the stream, right? We need to be looking out for that midterm elections in 2 years, right? In 2027, if I'm not mistaken. I think I have that right. if I'm wrong, my apologies, guys. But you know, the main point here is that we need to look out for the midterm elections and even the year after that as well, because we're going to be seeing more data coming in from the effects of the current trade war, right? So, you know, I think again, with Jerome Powell, it's going to be a little bit wishy-washy again. I mean, he's been very iffy on touching sensitive topics like politics, since they're supposed to be not really biased at all. But trust me, they do look at what the current administration is doing at that time, right? And you know, they do need to factor in with this uncertainty that President Trump has brought in, and this very back and forth actions on tariffs. And you know, it may be, you know, it may be smart to them from their own perspective to be patient, but I wish they can be a bit more proactive. And hopefully tomorrow, Jerome Powell, again, this is from an ideal subjective perspective from myself, hopefully they can, or at least Jerome Powell can indicate that, you know, yes, they're indeed factoring in this current uncertainty that has wrecked the markets since the start of this year. Okay, and again, I don't care if he says it directly or indirectly. I just want you guys to kind of look out for that and listen for that, because it's gonna be important. I don't want them to be complacent to the current data that they have now that's coming out month over month, like CPI and PPI, or even like you know, the weekly jobless claims that comes out. I don't want them to just focus on that one point alone, that one focal point alone, from a short-term perspective, but I want them to focus on the long term as well. And I know they are going to do that. I mean, I'm not a part of the Federal Reserve. They have a lot more data, and there are a lot more smarter people in that that branch of the government. So, you know, hopefully, I really hope that they are focusing on the long-term perspectives on how this uncertainty and fear is going to be priced into the markets and the overall economy. Does that make sense, guys? Make sure you guys hit that like button down below if you are enjoying what I'm saying right now, and most importantly, if it will become applicable to you guys, especially tomorrow, since it is the FOMC rate decision and the Jerome Powell news conference. Okay, hey, I see you guys. It's your hearts there. Awesome, awesome, awesome. Hey, Joel. It's a tons of value joining just facts. Awesome, awesome. Okay, so this is something that I really want you guys to listen in and remember into tomorrow, before the market opens tomorrow and even before the news conference. But you know, I really think it's important for you guys to understand that the Federal Reserve is always looking at things from multiple different perspectives. And yes, I know sometimes the questions that the reporters are asking are could be, from my own opinion, a little bit short-minded, but again, they're reporters, right? They need to be looking into what Jerome Powell is saying at that news conference, and they want to poke at him a little bit to get answers that they want, right? So, but again, disregarding the reporters' questions, right? We need to focus on how Jerome Powell is saying things. We need to see whether or not he's tiptoeing around this current pause that we're in this current rate cut cycle. Again, just as a reminder, we are in a rate cut cycle, right? We haven't seen a rate cut since last year, so it's been a couple months. So you guys are probably wondering, where, you know, are we in a rate cut cycle right now? But we are indeed in a rate cut cycle, right? We're just in a momentary pause. All right. So again, you know, I think Jerome Powell, you know, we're gonna keep that 4.25% to 4.5% for the benchmark interest rate or the federal funds rate. Again, they're both synonymous names, and you know, based on that, I think, to be honest, guys, the markets, again, like I said earlier, that they have already priced in. The markets have priced in that we won't be seeing a rate cut anytime soon. Okay, and I've typed more on this, and I've written more about this in this week's CFO Streaming Watch report too. So make sure to you guys DM me on Instagram at ChartsFocus1 to get access to the CFO Swing and Watch report, which will also give you full access to the private CFO Discord as well. Okay, but the reason why I'm bringing this up again is that I think with this move down, the Federal Reserve really needs to they really need to watch out and factor in the uncertainty aspect of the overall markets and from an economic perspective too. And I really hope that even if they decide to pause and continue to pause into the next FOMC meeting, which is going to be in May, right? So we're not going to have another one in April, but we're going to have one in May. That at least at that point, depending on where the markets are at and where the economy is at, regarding specifically inflation and the labor market, I really hope that they can start to tell us what the potential effects are with this current trade war and tariffs. Okay, we're seeing current active trade agreements being absolutely ripped apart from this current administration's activity, right, and actions and executive orders. And so, it is something to really watch out for. And I think you guys should really be hedged into tomorrow, even though what I'm saying right now might be indicating that you guys shouldn't be hedged, but you guys should be hedged, right? The markets have priced in no rate cut, but whatever Jerome Powell says, the markets will be very hyper sensitized to his words, right? So, when it comes to President Trump's, trade policies right now, I think Jerome Powell will mention it. He will have to mention it. The reporters will also ask him questions regarding that. If he doesn't say anything about it in his opening statement, because again, he's just going to talk about the two mandates, the dual mandate to bring inflation down to the 2% target and making sure that the labor market is, again, quote unquote, balanced. Right? So that's my own word. Jerome Powell never said balanced, but we're still kind of having a tight labor market, but we have seen the unemployment rate tick up last year in May. I think we've stayed between the range of 4.0% to 4.2% or 4.1%. No, I think it's 4.2%. Yeah, and so the labor market has been steady, but I think in the longer term, if we did not have this caveat, this kind of right hook from the current administration, the Federal Reserve probably would have concocted the unemployment rate to rise up higher, maybe to around 4.5%, as I've stated back in 2022. If you guys remember from the reports, I provided a lot of essential information back in the bear market of 2022. So if anyone has been a member of the CFO Swing and Watch report in 2022, go back to all of the reports in that year and read through it. All right, I provided such good information on the Federal Reserve and the overall economy. So please go back to the reports in 2022. Okay, so I think just kind of from a conclusive perspective now for this stream, I'm not too hyped about Jerome Powell saving the markets. Again, we have entered into, okay, now let's kind of segue into the technical aspect, okay? So this is the SPY futures, E-mini futures, or ticker symbol, right? And we've officially entered into correction territory, as all the headlines have been saying last week, right? But again, what is the textbook definition of a correction from a percentage perspective? -5 to -10% from swing highs to swing lows. Okay, and again, if we decide to breach -10%, we are opening the gates for a bear market, or at least a crash, which will obviously indicate a recession. All right, and again, that could be -15% or even -20%, which would be an official bear market, and that's what we saw in 2022. Okay, and again, that's the reason why I was frustrated that a lot of officials in that current administration, in that time of administration, was not willing to say that we are in a recession after two back-to-back consecutive negative GDP growth, right? So With the technical perspective here, it's a little bit too I would say it's presumptuous to try to say that we're heading towards a recession right now. There are definitely signs that we should be heading into a recession in the next few quarters, or even into next year, early next year. But again, I'm not going to be speculating all day out there to next year. That's very stupid of me to do. Just going to focus on the current data that we have now, and it seems like, again, all the reports, all the economic reports, specifically on the labor market and on inflation, continue to point that what the Federal Reserve is doing by keeping the interest rates at these levels, which is again still high, is working out so far, right? But again, we have this caveat, this right hook from the current administration with the trade war, right, and these tariffs, and so they're gonna have to really. Yes, they're going to be patient, but they also have to be very, very aware of what is going on with the current administration and what they're trying to do, right, with the overall U.S. economy. And again, there are a lot of signs indicating a lot of pessimism in the overall U.S. economy, as a lot of our free trade partners are starting to make other free trade agreements with other countries and excluding the U.S. out, which is not good, okay? Where, again, why is it not good? Well, because the world continues to become a freer trade, right? A freer world of trade, right? This is something that we have been moving towards since the around 1970s to 1980s. Okay, so the times change, right? But now the U.S. is trying to go backwards, right, instead of moving forward, and that's something that has again been one of the major points on Donald Trump's campaigns, right, since his first announcement to run as president, right, back in 2015, I think it was. Well, anyways, and even just during his first term as well as president. So again, he's just doing the same thing in his second term here as president. But it seems to be a lot worse now, as the markets are realizing what has occurred here, right? And they're starting to actually look back into time to his first term, and actually most likely they are also reading the data that has come out from the effects of his trade war from 2018 to 2019. Okay, so with all this in mind, guys, please be careful tomorrow. Again, hedge. If you guys aren't hedging, that's on you. If you guys are trying to deploy your cash that you have raised, hopefully you guys have raised a lot of cash like me and all the other CFO Swing Watch readers and private members. You guys are holding onto that cash and not trying to put it to work tomorrow, especially during the news conference or after, right? Because again, we tend to see the real move coming either the news conference is done or the very next day, right? So we also have March's OPEX date on this Friday too. So this is going to be a very hectic week in the last half of this week. So please be careful. You guys do not want to be caught with your pants hanging down. So hedge. Does that make sense, guys? Hey, 11 likes. I just noticed. Thank you guys so much. Okay, so there is every possibility for us to have a nice V-shaped recovery, but based on how pessimistic the markets have been, it seems like it's going to be a pretty rough recovery. We're going to be seeing a lot of volatile ups and downs while making a clear uptrend, but it's going to be hard to tell with a lot of uncertainty, fear, and doubt going into the markets rather than optimism, even at these lows here, even though we had a nice 2-day bounce from last Friday to yesterday. So I think it's crucial that you guys understand that we could still be seeing lower highs and even lower lows in the next couple of weeks, depending on how Jerome Powell answers the reporters' questions, or even during his opening statement. Does that make sense, guys? Okay. Make sure you guys hit that like button down below if this is making sense. And hopefully my audio is fine, guys. Is my audio fine, guys? Hopefully it is. If not, then please let me know. Because that means I was saying all of this without uh-oh. Okay, let me check on my phone here. Okay, I think that was just on my end. The replay here on my side on YouTube was showing that I was buffering, but I'm not. Hopefully. The mic is fine? Yes? Okay. Okay, good. Alright, thank you guys. Okay, thank you guys for your emojis. Thank you. Okay, so yeah, that's pretty much it, guys. Just watch out, and please watch out what Trump is saying. It's pretty hectic out there. Unfortunately, it has come to this. But hey, we're expecting it, right? The people at the CFO Swing Watch readers, right? The CFO Swing Watch readers and the private members of the private CFO Discord, we have anticipated this, right? So please make sure you guys are hedged tomorrow, depending on what Jerome Powell says and how you guys are positioned in your overall trading accounts. Okay, so if you guys are ultra short, make sure you guys have some calls to hedge. If you guys are overtly long, make sure you guys have some puts to hedge. Does that make sense? Okay, it's never a bad idea to be hedging, even if we're starting to pivot from the current swing lows. All right, especially after reaching this technical correction. All right, so again, as a quick summary. Okay, quick summary here. Make sure you guys understand that Jerome Powell is speaking tomorrow, and whatever he says will move the markets. The markets have not priced in what he will say or his words, but the market has priced in the fact that we have a 99% probability that rates will remain unchanged. Okay, and depending on what he says tomorrow, we're most likely going to be seeing yields moving very rapidly as well, and bonds too. So watch out for bonds like TLT, right? TLT, 20+ year Treasury ETF, or IEI or IEF. Okay, if you guys want to take a look at the shorter term maturity bond ETFs. Okay, but again, as a quick reminder, yields are not going down because Trump's policies are working. They're only going down because we're seeing huge demand into bonds, into safe havens. We're also seeing saving yields, okay, saving account yields going up too, as people are starting to save more. They're opening up savings accounts. They're also buying bonds. Right? Everyone is in protection mode for their money. All right, they're all exiting U.S. equities, and we're seeing this even across institutions as well. So this is something to really be focusing on for the mid to long term perspective, especially into next year. Okay, so again, Trump came in, right? Trump came in like a shark and completely destroyed the last 2+ years of a great new bull market that we had. And this is just what Trump does, right? I mean, this is what we saw in 2018 and 2019 too, especially from that transition from 2018 to 2019 when we had that huge flash crash into the end of 2018 as well. So, this may become hectic if Jerome Powell and President Trump decides to fight each other again and argue. But it looks like they're starting to kind of just stay away from each other and kind of focusing on what they need to do for the American people. All right. That is it for tonight, guys. Hey, Ray, thank you for coming in and liking the stream and for that comment. Thank you. But yeah, that is it for tonight, guys. And before I finish the stream here, make sure you guys remember that if you guys want to be a reader of the CFO Swing Watch report, okay, look at the description box down below and you guys will see the subscription link. And if you guys subscribe tonight, okay, you guys will given full access to the private CFO Discord, and you'll get access to all the previous important CFO Swing Watch reports as well. I don't really have any words to say here other than that you guys will 100% not regret joining. Right? I mean, I don't know how else to put it. Right? I don't have any words to say to really make it even more convincing to you guys. But you know, as all my readers have said so far, you know, they haven't regretted joining. They have learned so much. Again, this report is literally a report that you guys can learn and earn from. Right? You guys could be consistently and constantly learning while trying to earn a living through trading, right? And a lot of people use the CFO Swing Watch report as either to generate trade ideas for themselves, or even, well, this is most of my readers, to generate long-term investments. Okay, and you know, this is something that I've been talking about for quite some time now. But the CFO Swing Watch report can be used across many different ways of trading, whether it be day trading, swing trading, or long-term investing. All that matters is your own time frame or horizon, right? Time frame horizon, right? And you know, I really hope that you guys can give it a chance, right? At least give it a month's worth to become a reader, to be a reader, and be a part of the CFO Swing Watch report and the private CFO Discord. And hey, if you guys don't like it, you know, that's fine. Right? But if you guys can you know, try it out for 30 days, that would be amazing. Okay? And if you guys are, you know, interested, and if you guys have any questions regarding the report itself, please DM me on Instagram at chartsfocus1. Okay? Have a great rest of your night, guys. Thank you so much for watching. Thank you guys so much for liking and commenting as well in the live chat room. I'll see you guys on the next stream. Excuse me, guys, on the next stream at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time on Thursday. Thank you guys so much, and good night.